Hi everyone. Today is March the 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. For the next 3 days, I'll be on the Central Time Zone and then off to Portugal. No morning update on Thursday because I will be in flight / landing / suffering from extreme jet lag. Okay, we're starting with gold today because it's really been running like crazy since about the 4th of March. So it's, on a good solid 8-day run, as it were. And it has followed the dollar. As it moves up, the dollar has come down quite a fair bit. This morning, the dollar filled an important gap at the 102 area, is trying to bounce. At the same time, we've got a little bit of divergent action here. So we are in a buy the dip zone, but we could retrace a little bit of this because we are very extended from this tight, simple moving average here. It is absolutely very far extended away from it. So I would say time to feed the ducks. If you've got any things in gold, just a little, take some profit and then, wait for the next good pullback to trade. We are in the middle of a big contract rollover in the futures market. And so we're going to be looking at the 2 in TrendSpider here. But let's hop to oil. The last time I did a report was Thursday of last week. And interestingly, we're still looking at the same sort of support lines, same sort of resistance lines. We're coming into the lower band in motion. Notice this entire run up, momentum has pulled back. So how do you trade that? Listen, the big mistake we get as traders is we trade momentum instead of price. Listen, you're to trade price. And so price says, you look at the moving average, it says buy the dip. But a downward momentum tells you to sell new highs that have been recent. And so that's what you look at when things are divergent. When a momentum indicator is divergent, do not start thinking about taking tops. Look about buying the pullback in trend. And then when things start moving in the same direction, Bob's your uncle. You can sell the bottoms. You can do all kinds of things. Buy the tops. You do all kinds of things and not really worry about risk coming in to bite the side out of your face. So that being said, that's what we're looking at from an oil perspective. Let's go all the way back. Oops, we're in ES2. Pardon me. When this turns to ES1, we'll have our notes back up. But today, I'm not going through that. All right, so here's what we're looking at. We have the same sort of dribbling divergent action under positive trend. So what does that mean? Dip buying. So what does this mean? It could be steeper dips. Okay, are we under this moving average? Yes. What's happened every time we've been under that moving average? At some juncture, it made a bottom and began to bounce. So this is where we sit on our hands. We say, hey, either I'm going to do quick snap trades that are selling big resistance zones, or I sit on my hands and I wait for the deep dips to give them a buy. All right, that's all we can do here today, but we are showing continued negative divergence on these daily time frames, and that's really, really important to look at. For the NQ, same sort of things. I have the levels engaged, put an alert on them. Negative divergence really since February the 9th. And yet we're at these new highs. So what does it tell you? When your moving averages are going in the approximate same direction, you sell the bounce in this case. Here, moving straight up, it is buying the dip, and now it is the combination of both. It is buying the dip once it stabilizes and selling the bounce. What have we got? We've got ourselves a megaphone, right? This is not the kind of day that you want to buy a 0 DTE unless you're at the very edges of resistance and you see it collapsing. or on the very edges of resistance, and you see it bouncing, and you have to go at the money, take a little bit of the bounce and get out. Holding 0 DTEs or event contracts in a day like today is going to give you nothing but mass erosion. This is a day to sell the formations. So you go well out of the money and you sell the edges, perhaps in a short iron condor. All right, let's go to the ES. Same sort of thing. What are we looking at up here? 50 to 22, again, contract roll. So these numbers are what we are staring down. Buy the dip. This is the first place traders are going to buy the dip. Notice the last time how steep the wick was. So don't expect it to just hold and bounce. You're going to have to be pretty careful today. So my suspicion is, look, negative divergence. So you're going to be selling the peak bounces or buying the deep dips. That's all you need to look at today. Let's take a look at the YM next. Same sort of thing, a little bit weaker. It looks a lot like the NQ, not like the ES, right? What are they doing here? Trying to buy the dip. What does momentum tell us? Momentum tells us, listen, it is downward drifting. And so what I want to do here is wait for the dip to buy, because the traders have been rewarded with buying the dip time after time after time after time after time, right? And so look, we're in a mean reversion. There's some bigger moving average down here that we might be running into, right? This is a 20, so maybe it's a 30 it's running into. At the end of the day, you have to look at price to tell you what to do, not the moving average. And so the price tells me, hey, I could come all the way down here, or maybe even further, but as soon as I begin to lift, then I've got buying pressure that could take me up to what? A lower high. Why? Because that's what we're making right now. So we assume the obvious, and that's what we'll get to, okay? That's what this chart is looking like. Now, finally, in the futures, we have the RTY. Whoops, RTY. Right? This one hasn't even touched this area, and it's because people are in the dash for trash, thinking that interest rates are going to come down, so they want to go into the deep dive of, well, what's got value but's not really performing. Here's the thing, I say it quite often, haven't said it in a while, but the stock market is like real estate, right? The neighborhood's way more important than the house, and this RTY neighborhood, it's not a good neighborhood. It just isn't. And so it's going to underperform. SMCI is going to be moved out of the RTY as it moves into the S&P 500. That's going to make a fair difference. Let's quickly go to SPY. I know you guys that look at everything like this are like, lady, what's going on? All right, so resistance, interesting. I was gone on Friday. It moved up and completely collapsed. All right, so here's where we are, sitting at a line in the sand. No, I'm not. I'm gonna use a new one, and I'm gonna say, okay, that's my top end, right? Support, I think, is still 504. Resistance, we broke through 512. That said, hey, listen, you buy the dip. As long as it's over 512, you keep moving up into the spaces that are higher. Use yourself a Fibonacci. But what are we doing now? Mean reversion, coming right into heavy congestion. I don't think anything really happens until the Fed tells us what they want to do. This is still neutral to bullish formation, lines in the sand, still deep dips, buy zones. Deep dips, buy zones. Big spikes, sell zones. Negative divergence, negative divergence. Price is moving up, momentum is moving down. That tells us buy the dip until the price formation changes, and then we can sell the bounce. Okay, here we are with the Qs coming right into this trend line, old resistance, new support. Who's going to come in this morning? Likely buyers, right? It is a buy the dip formation. What is congested resistance? 446, look what happened on Friday. It came into 446, broke through, went all the way to 448, but as soon as it lost that 446, all the way down. And that's how you frame out your trade. You don't say, hey, I'm going to short it right up there. because trend is up. Wait for the trend to exhaust, lose the last prior high, and then watch it drift down. That's how you take the trade. Same way here, you're looking for the buyers to come in. Are they? I don't know. If they are, great. If they aren't, you don't buy. But 437 remains that congested support, many, many days old. Traders are going to try and buy that line in the sand. All right, so watch that there. Okay, folks, that's it for me. I'll see you on the platforms. And for those of us in the Benzinga Pro, we'll be doing our Zoom study time today. I'm really looking forward to it, looking forward to putting on some good trades and taking off some profits.